Tuesday, January 18th, 2022, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how the world economy is falling into a stagflationary trap and how the Chinese economy is coming to a grinding halt. Before I start though, I'd like to thank those of you who sent me some really nice silver coins to Gold Investments. I don't have a P.O. box number, mainly because it's really expensive, not worth for me to have one here in the UK. So some of you have sent me stuff through Gold Investments. I was there yesterday. I went into the city to see, I saw actually Simon. He was there. Oliver wasn't there yesterday. And thank you very much. I'm not going to use names, of course, but you know who you are, and thank you very much. It was like a nice belated Christmas present. So, stagflation, or we could call it maybe hyper-stagflation as well, as we're seeing PPIs around the world go up in double digits. PPI, of course, is the producer price index. It's pretty much the wholesale measure of rising prices. I was shocked the other day, I think it was last week, that the PPI for Norway was 68%, rose by 68% in 2021. So how come the CPI in Norway is still pretty low? I think relatively low. It's still probably around 5%. Well, I've read as well that the Norwegian government, they've subsidized a lot of the energy costs for all Norwegians. I think they've been increasing the subsidy. They've increased it recently. So they've been able to hide all the inflation that's coming. And stagflation, of course, was a term used in the 70s and after the 70s as well to describe that period. And it was a shock to Keynesians because Keynesians, they think that if the economy slows down, that you won't have inflation. They don't understand that inflation is really the debasement of the currency. Basically, when you overissue fiat currency that's backed by nothing, that currency becomes worth less and less against things that can't be produced as quickly as fiat currency. And they seem to be making the same mistake. 40 years later, they don't seem to understand that you can have an economy that's slowing down massively and currencies that are getting debased. And by debased, I mean they're not buying as much of all the things that are necessary for survival, like energy, food, shelter, yes, all those things. And the Chinese economy is an example of what's going on. Yesterday they had their GDP data that was published. If you remember from the last few years prior to the pandemic or 2020, the Chinese economy grew pretty much around a 6 to 7% clip. And the Chinese economy needs to grow quite quickly because they have still a big agrarian population, and they're coming into the cities, they're growing. But yesterday, for example, GDP for the fourth quarter, year on year, was expected to come out at 4% growth, and it came out at 3.6. And the previous GDP number was 4.9. So the Chinese economy is decelerating very quickly. I think the US economy is decelerating as well. We've seen the last non-farm payroll numbers. They've dropped into the 200,000s. And of course, those numbers are manipulated. Yes, whatever you think about what's going on health-wise in Omicron, that's going to put a damper in the works. We've spoken about how China as well. I spoke in the Mike and Mara show and my live stream on Sunday, how the zero COVID policy of China is hurting things. The supply chain is not going to be improving anytime soon, I don't think. But the biggest reason why there is a stagflationary environment is because governments are crowding out the private sector. They've also been scaring the public, of course, with what's been going on health-wise, and they've destroyed a lot of businesses. They've taken on massive amounts of debt, of course, over the last 18 months to pay people to stay at home and not produce anything. So it's totally disrupted everything. And yesterday, and this is another thing I wanted to talk about, people who hope for someone on a white horse, be it in the US, UK, or Europe, to come and save them, some politician. I mean, think again. There's some pictures here. And it shows that these politicians, and it doesn't matter if it's Russia, China, US, Europe, they're all playing on the same team. All the talk of geopolitical tension and everything we listen to is just theater, kabuki theater, to keep us, the public, scared. And that's why I never vote. If voting mattered, as I've said many times, it would be illegal. So you see pictures here of President Putin at the World Economic Forum, shaking hands with Klaus Schwab. You see the same for former President of the United States here, Trump, at the World Economic Forum, shaking hands with Klaus Schwab. They're all playing the same game, people. Wake up. No one's going to save you. You need to look after yourself, your friends in your community, and be aware that these people are really not looking after your interest. And there you go, Xi Jinping, or Winnie the, aka Winnie the Pooh. He's with Klaus Schwab as well, and he met with Klaus Schwab yesterday. Didn't meet with him directly, of course. Davos this year is they're concerned about security, so they're having a Zoom conference. Davos is Zoom this year, and the FT reported Xi Jinping defends crackdowns and common prosperity drive, but that's not what I wanted to touch upon. I just wanted to show you that he's also concerned, Xi Jinping, about the central bankers tightening too quickly. Yes, there's all the talk that we're going to raise, or the Fed's going to raise rates 4 or 5 times. They're going to run off the balance sheets. And it says here, on the global economy, the Chinese president warns of serious negative spillovers if major economies slam on the brakes or take a U-turn in monetary policies as they grapple with accelerating inflation. Developing countries would also bear the brunt of the changes, he said. Yes, he's acknowledging there's an inflation problem. While the inflation problem has been created for many decades, I would say, and especially since the '08 crisis. As I've said many times, the world economy, be it China, the US, Europe, or UK, we're all addicted to easy money and easy credit. But the interesting thing, and it shows how all these people are on the same wavelength in terms of the health crisis. Even former President Trump said he had the 3 medical procedures. He said, he didn't really say you should have it, but he's for it. So wake up, everyone, wake up. He's not going to come to save you. So I'm probably going to get a lot of stick from people for this, but that's the way I see it. So he says here, this is what they say about Xi and COVID-19 pandemic. On the COVID-19 pandemic, she said countries should fully leverage vaccines as a powerful weapon, ensure their equitable distribution, quicken vaccination, and close the global immunization gap. Some people are arguing that China will be taking over from the US for the globalists. It makes sense. Let's hope not. We don't want a world, well, it doesn't really matter who runs who's really leading the way for the globalists. We don't want the globalists in charge, period, under any kind of leadership, or be it US or China leadership, I would say. This is how it finishes here. And he says, and I quote, "Strong confidence and cooperation represent the only right way to defeat the pandemic. Holding each other back and shifting blame would only cause needless delay in response and distracting us from the overall objective." So as you can see, they're all on the same team, these guys. Same club. We're not part of it. But we can create our own club outside this globalist system, hopefully. And yes, with that, let's look at the markets this morning, see where they are. Yesterday it was a holiday, so the markets in the US didn't trade. FX markets and futures markets did trade, of course. I'm noticing that the bond market is continuing to drop prices, and yields are continuing to rise. And that's creating problems already, even before the Fed is really completed its tapering. We're going to have to keep an eye on that, on their balance sheet to see if they really do it. I have a feeling, looking at the 10-year note chart, and this is for prices, not yields, that we could see further deterioration in the bond market and higher yields, but I think we could be close to some kind of juncture where the Fed has to backtrack, and the fact that economies are slowing down, the fact that the major driver of the world economy, China, is slowing down. You could argue it's still the US, but I would say it's China, because China is the manufacturing powerhouse of the world. And if they're slowing down, it means that the whole world's slowing down. But as you can see by this chart here, it's a monthly chart of the 10-year note future going back to the early 80s, June 1982. And as you can see, we're approaching some key support here. About 1.5 points below from here. I calculated that would probably correspond to around 2%, maybe a little higher. So yeah, we're getting to a point where we could see things reverse in terms of what the markets and investors think. And we could see the Fed backtrack. Who knows? Some people are even expecting a rate hike already in March. So we'll have to see. But anyway, it's 5 to 9 a.m. London time. Quickly look where the markets are. We got spot gold down just about $7 at 18.12, right near the lows. The high has been 18.23. Silver is down about 8 cents at 22.90. High's been 23.12. The low's been 22.85. The Dow future is down 220 points, 2/3%. The NASDAQ 100 future is down about 200 points, or 1.25%. And the S&P future is down 7/8%, or about 40 points. FTSE is down 0.75%, 75.55. To the currencies, we got sterling down slightly at 136.38. The euro is down about 0.15% at 113.91. The dollar's unchanged versus the yen, 114.70. And the dollar slightly higher versus the yuan at 635.55. Aussie dollar is down 1/3%, just below 72. The dollar is down slightly versus the Canadian dollar, 125.09. And the Kiwi dollar is down about 0.4% at 67.70. To the commodities, general commodities, we're seeing WTI crude challenge the high we saw last year, around 85. And if we break through 85 towards 86, that would be the highest level since 2014, I think October 2014. Right now, WTI crude is up just under 1% at 84.50. So yes, some commodities like natural gas have come off, not only in the US, but in Europe. But now we're seeing oil go up. So there's no let up. And other commodities like lumber and the soft commodities, they're on a rampage as well. And that's what tells me that the inflationary environment is not going to improve. And of course, the Keynesians think it will because economies around the world are improving. But I think they're going to be in for another big shock 40 years later. They don't seem to learn, of course. High-grade copper is down 0.8% at 439.70. And U.S. natural gas is up half a percent at 416. And we'll finish off, quickly look at the 10-year yield to see where we are. That chart I showed you, of course, of the 10-year future is the price. And it's very long term. But right now, we're near the highs of the year. We started the year just around 150, the 10-year yield. We're now at 1.83. It's up 6 basis points. It's been as high as 186 overnight, the 10-year yield. That will spill over into mortgage rates. Mortgage rates have been rising quite sharply, and also other corporate bonds. It will spill over into the cost of financing for corporations that don't have very good credit, and that would be junk bonds. It could be a problem, and I think Winnie the Pooh or President Xi is aware of that. And I mean, we've seen what's happening in China in terms of the real estate market. So yes, I'm not too sure about the Fed. Maybe they will bring the whole edifice down and raise rates 4 or 5 times. Who knows? But leopards don't change their spot, do they? Every time there's some problem, they find an excuse to print even more. But maybe, as I've said before in the last week or so, they're looking to raise rates before everything hits the fan so they can cut again and not go negative, because that wouldn't be a good thing for the major reserve currency. So if you enjoyed this video, make sure you hit the like button, share this video far and wide. Think about subscribing to this channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.